Hey everyone, welcome to this week's Nasdaq Dorsey Wright podcast. This is Will. I got Ian with me. We're talking Thursday morning, August 24th. It's coming out Friday. Ian, question of the week. Do you own NVDA? No, I'm kidding, but actually.
I wish I did. I've had some other semiconductor stocks in my analyst portfolio on the technology side.
Mhm.
Unfortunately, NVIDIA has not been one of them. Been kicking myself. Just when you think it can't go higher, it proves you wrong.
Yeah, I mean seriously, this is not some penny stock that is rallying. This has been one of the biggest companies in the world that has gone parabolic this year. Have you looked at the chart recently?
I have, I've actually been, looking at the charts, kind of kicking myself. But I mean, you've seen the stock prior to today's move, you're up over 220% year to date, right? You look at movement since that massive move higher that we saw in May. I mean, it's a pretty consistent technical picture, honestly. I mean, you've got now two consecutive buy signals. It wasn't even, it was 30% overbought prior to today's move. I mean, it doesn't look like a stock that's up 220% year to date. And
Yeah.
then obviously when you go back to the prior massive column of X's up, you kind of see where that came from there. But the technicals are what the technicals are, strong five for five.
Yeah, yeah, and talk about just the some of the point figure charting. You got these one-off sell signals all the way up, but those were head fakes along the way. In hindsight, here, the only time you've really gotten consecutive sell signals have actually been a decent indication that you're going to see some follow through weakness, but those one-off sell signals haven't meant much.
Right. I mean, as we typically see when we see a stock in a strong uptrend, certainly qualify NVIDIA in that camp. The first sell signal, strong uptrend is typically not that sign of a broader weakness, right?
Yeah,
I mean, but a pretty consistent name with its upward signal movement. They were getting a second consecutive buy signal. Another chart, I know it's kind of totally shifting gears from there, but looking at the PNF tie-in, that is much more consistent in its signal movement that changed pretty recently. Will the U.S. dollar? I mean, just kind of
yeah.
totally switching gears in terms of something that has seen a lot of movement or a lot of conversation last year, a little bit less so recently, and maybe now coming in the spotlight a little bit more.
Yeah, we talked about this a fair amount in our reports this week. I know I was blabbering about it on the morning video a couple of different times that we put out to our clients typically before 9 a.m. each day. But the consistency of signals, what you were talking about in really late 2022 and through most of 2023, the dollar was in downtrend by pretty much any chart that you look at. This would be the case, especially for point and figure here, consecutive sell signals. And then recently we got a return to a buy signal, which telling us that the US dollar is strengthening materially. Uh, Objectively, we returned to a point and figure buy signal at 103.50. So, and I know we've talked about this before, but the trend of signals is that I think probably the takeaway that we want to make, or that's the point that we want to make today.
Yeah, I think that it's kind of interesting to note. So we saw the trending of signals that we saw last year, looking at multiple consecutive buy signals. I mean, you're looking at what is that, 10 consecutive buy signals that I think we saw last year, really starting in 2021 and March 2021 up until September of 22. The most consecutive buy signals we saw for the US dollar in its history. We saw, or at least in our charting history. We saw now looking at seven consecutive buy signals or seven consecutive sell signals prior to this most recent buy signal, which we had seen before. So if you go back to 2006, we saw 2006 into 2007 and actually ending in March of 2008, we saw more consecutive buy or sell signals at that point, ultimately seeing 10 consecutive sell signals lower. Back, if you go back to 1994, we saw a lot of consecutive sell signals at that point as well. But all that to say is just, I mean, we have seen consecutive movement lower in the past, but it hasn't really happened all that many times. And it's really seen a definitive trend recently of once it gets going in one direction, it tends to kind of keep going in that way.
Yeah, I think that that's the point here is that we're not going to come out and speculate that the US dollar is going up 30% or something like that
Right.
based off the chart here, but based off based off the historical trends of the US dollar, it does tend to trend really well. It's rare that you get, for example, a return to a buy signal and you don't get some type of follow through, or you get a sell signal and you don't get some type of follow through. So I'd say the weight of the evidence has certainly, I think, begun to shift in that we may be in a higher dollar rate environment going forward.
Yeah, and I think that that's come to you've seen that depicted on the price movement of some other areas. I mean, namely international equities, right? I mean, we're um, rooting for international equities earlier this year. We saw it move to the top spot in the dollar asset class rankings. That strength shifted toward the end of July. We saw internationals fall into the second ranked position behind domestic equities. And really, some of that downside movement has just been amplified over the course of the past week or so. So we've seen this improvement or strengthening of the dollar just play into further declines for international equities, which tend to see kind of in those rising dollar environments, you tend to see further weakness for international equities, and then falling dollars tend to be pretty positive. So we are entering this rising dollar theme. You might see some further headwinds for the international equity space down the road.
Yeah, we tend to put a falling dollar study in our report. We've featured a couple of different times, but we'll throw it on YouTube as well, and you'll see that there's a pretty big difference between rising falling dollar environments. And for this study, we just categorize a 10% rally as a rising dollar and then a 10% decline as a falling dollar. So it's not an exact science, but it gives you an idea, at least directionally, of what's going on. And typically emerging developed both pretty poor performers, and you could say, perhaps not coincidentally, that emerging markets EEM fund dipped back into a negative trend over the past week. That was in a somewhat orderly uptrend since November of 22. It was great for active management, especially like macro asset allocators, because you could finally own something other than the S&P 500 and add value, add alpha and like active return. But again, last week back into a negative trend. This is another one that trend changes have been pretty substantial and they tend to see some follow through. But I know Ian, you cover international and you had some good thoughts before about EEM's breakdown apart from just the US dollar.
Yeah, I mean, EM has just kind of been emerging markets generally. It just the broader space has been lagging, even in the international equity improvement. We saw Europe leading the way of a lot of that improvement earlier this year, right? The emerging market space is really just lagging. That's because you have such a massive overweight towards China. I mean, China has been a lot of the reason for the recent weakness. We've seen continued economic concerns coming out of that space, which has just kind of permeated to many other areas in Asia, given the massive size of the Chinese economy. I mean, you look at EEM, and 70% of that fund is allocated into just a few Asia countries, which have the highest allocation of any countries within that respective fund. So, I mean, there are other areas within the emerging market space that continue to look decent, even in the current kind of dollar environment. But just those broader representatives are probably not areas that you want to be kind of looking toward, just given that broader regime. I mean, one area that kind of comes to mind in particular, we've talked a lot about the dollar movement. In looking at one area that hasn't shown the same kind of dollar movement is the US dollar Mexican peso relationship. For those that are following along on the platform, if you look at USD MXN, which
I'm
is
doing the
that
same thing. That is new to me. I'm pulling that up now.
it's that US dollar Mexican peso. So essentially, as this chart moves lower, you're getting a stronger peso. And we saw the chart go to a buy signal in August, which is kind of indicating strength for the US dollar. It just moved back to a sell signal with movement yesterday. So it's kind of showing that even though we're seeing this kind of broadening, strengthening dollar, maybe it's the near-shoring effect with continued weakness in China, people coming back over, looking to kind of move more economic movement back into Mexico, but or continue to move it into Mexico. But we're seeing that. I mean, Mexico's been a pretty consistently strong area in the top of most international rankings. You look at fund like EWW, consecutive buy signals pulling back from multi-year highs there on that default chart, kind of within an actionable range. I mean, there are pockets of strength, but I think that's the thing to focus on. It's going to be pockets. You're not going to want to be jumping into these broad exposure in the international equity space right now.
That makes sense to me. Yeah, I would agree on that. I would say if you were looking broad still, developed EFA looks a bit better at the time compared to EEM, a broad emerging market, like we said. EEM south of 3.0 fund score, EFA close to a 4, and then even just based off the chart, yet you haven't gotten back to a sell signal yet on the default there. So I think the diversification, maybe perhaps country diversification, is a big component there that also just we're seeing some more technical strength for developers. So hasn't officially rolled over yet by any means. I think it does have some additional headwinds for sure, though.
Yeah, and even if you do, I mean, if you give sell signal there, I mean that kind of sets up a potential shakeout pattern as we look toward
Yeah,
the last
yeah,
few months of the year.
clever. That would be true. Yeah, I mean, one sell signal wouldn't completely did destroy the uptrend there.
Which is different from emerging markets. When we saw that sell signal moving into a negative trend, I think
Right.
that's an important point that you highlighted there.
Yeah.
Um, yeah.
Yeah. All right. Well, what else? I think we've probably made our points. US dollar, international equities. We found out that you didn't own NVDA. What else do we got? We got, oh, the TUS piece from the where you were.
Well, there is. I think there's one kind of point to hit on from there. Yeah, I mean, in looking at maybe that jumping in that piece on the different percentile ranks. I mean, I was just gonna keep bringing up different countries to look at on the international front, but
Excited about
but
it.
we can maybe save that for another time and shift the gears back to the international equity or the domestic equity space from international equities. Um, One of the ways that we track that U.S. equity kind of strength of the broader market is through that U.S. equity core percentile rank. And the piece that Joseph had in the Were You Aware yesterday on Wednesday, I think what you see was that kind of resonated pretty well. So could see some pretty notable movement from seeing a core equity percentile rank that's at this high of levels.
Yeah, this one kind of resonated with me, and I think some others did as well. We're looking at how strong a basket of S&P 500 index funds are based off every other investable group that we have. So there's about a little over 130 investable groups that we track on the system. A basket of S&P 500 index funds is ranked third out of, again, 130 plus. So that puts it near the 99th percentile, which means that, again, explicitly, there's only two groups that are ranking higher than the S&P 500 index funds group right now. And those groups are, as my computer loads, contrarian MLPs. So a bit difficult basket to invest in regardless. But what he was looking at is how long that basket of S&P 500 index funds has been ranked this high. So he looked 97th percentile and above. How long have we been there? That's been the case for 65 days, which is the longest in the history of this tool, which we have. It's only about a 20-year look back, which is relatively short given the history of markets. But of the 20-year look back, this is the longest that we've seen this dominant of an equity core reading. And all the past occurrences have come in the past 5 years. So again, take it with a grain of salt, that really small sample size. But in the past 5 years, you have seen an exhale, at least in the, call it 1 to 6 month range for the broad market benchmarks relative to other areas.
Yeah, and I think another, I mean, you're looking at the space. I mean, you think of a core equity percentile rank up at such high levels. Um, how can it stay up there for that long? I mean, it's staying up at these levels despite moving in noticeably oversold territory from an average weekly overbought oversold perspective, across into like technically oversold average earlier this month for the first time since March of last year. The group had been technically average overbought since March of last year to just cross into oversold kind of territory, even though it's barely in that space for the first time in well over in quite a while here. So I think that that's a pretty interesting point to note too, is that we're seeing areas move lower, but we're not seeing the kind of technical strength of the market fall out of bed yet.
Yeah, no, yeah, it's true. And it's still sitting up there today. It's up at 98% right now. It's for active managers, it's a bit tough when the S&P 500 index funds group is that dominant. There's not a lot of areas to go and add value in terms of return. So if you do see some weakening there and some softness, I think it could definitely be a positive.
Yeah, it could be at least from like a normalization perspective, but I mean, those near term returns were kind of the area to keep an eye out for, right? I mean, you're looking at that 1 week, 1 month, out of the 3 month returns from those prior timeframes, and we saw extended periods of high core equity percentiles. And as we know, we're coming into a month that tends to be a little bit more risky from a market
hmm
perspective, right?
hmm I think this is one of the most talked about. Maybe I'm just paying attention more, but people talk about seasonality so much more than I feel like they have in the
We've
past.
never
Seems
stopped
like
talking about it, so that's
I know. Seems like everyone's well aware of September, and everyone was well aware of a recession, and well aware of the market going down and whatnot.
so they're too aware to the point now that it's going to keep going up. I guess that's a big question.
So self-fulfilling.
Yeah.
Yeah. Well, cool. Anything else we want to hit on for the week?
No, I think that kind of wraps it up. Looks like we got one more podcast in the month of August before we dive into that
Cool.
volatility season.
Cool. Well, hopefully we see everybody out in Vegas. Ian and I are going to be there with the rest of the team. We're really looking forward to that. That's what, 2 weeks out? 3 weeks away?
3 weeks, yeah, that brings a good point actually. So the 31st, a week from today, a week from this Thursday when we're recording, it's the last day to register for the event. So if you are looking to come, if you're interested in coming, if you've been thinking about it, just kind of waiting for the market to turn back around so you can throw that money back at the symposium. Then just want to let you know you got a week left and then we're going to be closing registration at the end of August. So
Yeah.
sign up
And
quick.
it's not just, like I said, Ian and I talking there. We'll have our portfolio managers sharing about the market. We'll have economists coming to talk about where they see things. So there's a fair amount of information to be taken in there.
Absolutely. And we'll get to see the new what they've done to the F1 track in Vegas, I guess. That'll be cool too.
Makes me excited.
Yeah.
All right, well, cool. We'll go ahead and formally say appreciate the audience this week. Per usual, reach out to us if we can be of any help. But until next week, hope you have a good one.